Retirement and you want to boost your 401k. It's a big question for a lot of people. Kimberly Reynolds is with the Welch Group, and she's here for advice on day trading. It's been one of the questions to the Welch Group. Good to see you today.
Good morning.
And you fill in for Stewart sometimes. He's our regular guest. Good to have you. So it's about day trading your 401k account. Actually, explain what that is first. How does that work?
So day trading means you're trying to time the market. You're trying to make decisions. You're doing fast trades daily or, on a couple-day basis. I've been in the business over 8 years, Stewart over 30 years. We have not met anybody that's been successful at day trading over a long period of time.
So apparently the question is about someone who wants to use their 401k in an effort to get higher returns as they're approaching retirement. But you're saying it never really has worked for anyone you've seen.
You may have a couple trades that are successful, but over the long period trying to do that, we have not seen success there. It's just very hard to time the market, and what I recommend is that you establish a solid investment strategy for your current situation. Stick with the strategy, monitor it, but do not make changes based on emotion. That's where people mess up.
Okay. All right. So if you're thinking about doing that with your 401k, you guys say probably not the best idea. Okay. The next one is interesting because it's a question from a woman who says the children have grown up, they've moved on, so they no longer are taken off on the taxes. So in order to offset that on her taxes, what did she do?
So what you do is as you have a dependent, this year you have $3,800 exemption per child.
Okay.
So as the children grow up and you lose that, the family sees more tax liability because they lose that exemption. So what we're recommending, what this lady did, was she added more to her 401k, which is less taxable income, which gives her the same effect and less tax paid. It's essentially what she's doing is she is deferring that tax, but she's saving for retirement, deferring that tax until she gets into retirement in her 401k account.
Okay, we discuss this among ourselves a lot. You probably get tons of questions about your 401k. When to take? Can you take something out of it? What do you do? What do you tell people most of the time?
Well, the IRS has said that you can start taking draws at 59.5 without a penalty, and every dollar that you take out is taxable. But the goal is that when you're working, you're making more money. When you get and you're hopefully deferring the money at a higher tax rate. Once you get into retirement, you're not making, your wages are much lower, or you do not have any wages, so you are able to pull that money out at a much lower tax rate. So the goal is to save that difference between when you're working and when you're not on the taxes.
Kimberly Reynolds from the Welch Group. Good to see you today.
Thank you.
Thanks for coming by. All right, still ahead.